Welcome to Turbo Impact, where we navigate sustainability in private capital. I am your host, Kenny Chen. Each episode, we sit down with investors, allocators, and corporate leaders shaping the next era of sustainability. We explore how capital is driving the global transition and how today's decisions are shaping the future of impact. Thank you for joining us. This podcast is brought to you by Turbo Net Zero, a pure-play sustainability advisory firm driving impact across the private markets. In this episode, we go inside Hamilton Lane's sustainability strategy with Nina Kraus, Director of Sustainability at one of the world's largest private markets investment firms, with over $950 billion in assets under management. Nina leads sustainability across Hamilton Lane's platform, working across strategies to help the firm deliver on diverse client objectives while ensuring accountability, alignment, and rigor in its overall sustainability approach. We also dive into how innovation and the technology are enabling the firm to respond to evolving market dynamics, touch on key sustainability trends, and explore the emerging tools shaping the next phase of sustainable investing. Here's my conversation with Nina Kraus. Hi, Nina. Welcome to Turbo Impact Podcast.
Hi, Kenny. Thank you so much for having me on the podcast today.
You started on the investment side and now lead sustainability across Hamilton Lane's institutional and private wealth platforms. Can you tell us more about your current role and how your deal team perspective helps you approach the sustainability work you are doing today?
Absolutely. So just taking a step back on Hamilton Lane, we're one of the largest private markets asset management firms globally and have been operating for more than 30 years. We've grown to $958 billion in assets under management and supervision, and $138 billion of that is assets under management and full discretion as of March 31st of this year. So just to set the stage, in terms of our sustainability function and role, we sit within the investment platform, and we as a business have felt very strongly about that. As a cross private markets firm, where we find the value in sustainability is through looking at a risk management lens, in proactively looking for value creation opportunities and thinking through strategy to offer our clients and investors the sustainable solutions and impact solutions that they're looking for that meet their needs from both a returns perspective as well as a sustainability perspective. Day to day, what that translates into for me is spending my time on investments and investment strategy, as well as on investment operations, partnering across our firm with my team, making sure that we're embedding the capabilities within our dedicated investment strategies, our investment teams, as well as our broader investment functional areas. And my time growing up in our investment strategies was invaluable to how I approach my role today. I think when we look at sustainability, a lot of the topics we tend to discuss and are incredibly topical in today's market, such as climate risk, we're looking at very long time horizons. And as we think through transition risk, physical risk, for example, these come up at different levels of time horizons. They come up differently in different sectors, different geographies, and ultimately coming back to the here and now and what we're delivering, which is long-term resilient portfolios to meet our clients and investors' needs, is absolutely something that I learned the fundamentals of through sitting within our investment strategies.
Thanks, Nina. My question to you is, how does Hamilton Lane approach sustainability across such a broad platform. You have strategies in primary, secondary, co-investments, private credit, private wealth. Can you tell us more about your approach?
Absolutely. And you're exactly right. When we handle the cross asset class and cross access point platform from a sustainability standpoint, the key way we think about this is adapting to the strategy or situation. Now, that doesn't mean that we don't have rigorous governance at the highest levels of our investment platform. So we do have that sits with our responsible investment committee that governs our overall comprehensive approach and how we think about policy. As we move into different access points and different asset classes, we need to adapt procedurally to meet those policies, and adapt not only in terms of what level of information, for example, might be available to work with, but also what level of depth and granularity we need to go into to ensure that we're thinking through the material risks that may arise, as well as the value creation opportunities and stewardship opportunities that we can achieve over the life of those investments. So it really is adapting to the situation that we think drives the overall suitability. And ultimately, because we have such a broad platform, the collaboration and the alignment and the learnings that we take away from each of the asset classes can be applied to strengthen our thinking in other areas. And so ultimately, we think the cross asset class access point dynamic makes it a really robust and interesting tapestry to really drive forward sustainability initiatives within portfolios.
Great point on collaboration. So in areas with less direct control, like secondaries, external managers, or customized managed accounts, how do you ensure alignment and accountability on sustainability?
Absolutely. So it all starts with a really robust platform and scale opportunity set, scale pipeline, because we need to be able to say no where there isn't alignment. That is incredibly critical. The ability to maintain rigor and discipline on that topic is fundamental. How we can ensure alignment really starts with the beginning of the investment process, having this as a lens from the beginning, doing robust investment due diligence, both on a commercial level as well as more functional levels, it is really critical to identifying that. And then as we think through crystallizing it, there are some levers such as legal documentation that we can pull towards the end of the process to ensure that alignment. Where we have alignment or where there are always evolving needs to deal with, great relationships really is a key to being able to effect stewardship initiatives on a scale level and where and when they're relevant. I think as we look through the stewardship lens, what we always want to do is to represent the evolving needs of our investors and our clients and represent where those sit. And what we like to do with all of our investment partners is keep that dialogue completely open so that both ways we're learning from each other, we're talking, we're adding value, and we're ensuring that we always keep those investors and beneficiaries in front of mind as we choose to invest, divest, and different ways to manage those investments.
Speaking of meeting different investors' needs, when clients come to you with bespoke sustainability mandates, especially in managed solutions, how do you build that across the investment lifecycle?
Absolutely. As we think about bespoke needs, tailored solutions, even going towards building dedicated product offerings to meet various investor needs, what we always think about is what is the opportunity set that we're seeing and how do we leverage those building blocks and leverage those access points as well as our cross asset class exposures in a way that meets their needs without shifting necessarily their investor experience. We find that most investors want great client service. They want everything delivered to meet their needs and their onward needs. And they want clarity, transparency, and are very returns and results focused. And so there's a lot of consistency in what investors want. As we think about the bespoke needs or starting to think about tailored solutions, what we find is that it's a very transparent and open dialogue. What are the needs? What's driving the different sustainability needs? How does this fit within the broader portfolio context and serve that portfolio? What are the regulations and laws that we may need to be complying with or reporting on to enable that investor to participate in a solution such as that? And as we go through that process of identifying and building the relationship around what that should look like, what we're doing is we're including different lead investors from our side. So senior individuals that are focused on different asset classes, access points in the conversation. And we're including our portfolio management group, which helps maintain as we narrow the addressable market to suit different tailored solutions. That portfolio management group really focuses on how we maintain risk-adjusted return, how we think about adding value at the portfolio level in how we manage that portfolio, and ultimately drive that return expectation alongside whatever other objectives are within that portfolio. And this portfolio management function and team is really critical in helping to deliver those tailored solutions for our clients and investors. Functionally, how it operates from a life cycle perspective is that everything still comes through the pipeline, and our portfolio management group, alongside other partners, is tasked with ensuring that those tailored solutions are being managed and invested in line with the expectations of those investors and of those clients. And ultimately, from a delivery perspective and a reporting perspective, there's naturally a much more bespoke level of reporting to suit those individual client needs and report on any additional sustainability or impact objectives associated with those portfolios.
Thanks, Nina. So private wealth is a growing focus for Hamilton Lane. How do you tailor sustainability integration in that context where your client goals and the levels of understanding may vary?
Absolutely. So functionally, we think about it very similarly. Each investor type has a unique set of needs. And even I would go as far as to say each underlying investor has their own set of needs if they're coming into a product solution. As we look at then how to deliver that, it's very similar. So thinking about the investor first, what are the needs? Thinking through clarity and transparency as we go to market with any solution, and governing that everything along that investment journey and along that product journey is in keeping and is exactly as disclosed, promised, clarified. And so ultimately, when we talk to our investors and clients about what are we doing on their behalf, that it is in line with those expectations and that they have all of the data and transparency they need to ensure that as they move into their own reporting and as they look to manage their own stakeholder expectations, that they really view us as a partner in that rather than really a completely separate entity. It really is about that transparency, that clarity, and then the rigor and governance along the way.
What are your LPs looking for today when it comes to sustainability, and how have their expectations changed in recent years?
So investors and our clients want it is bespoke and as suited and aligned to their views and their vision of what sustainability means as possible. And for us, that's great because we have built our business on tailoring, on multi-product solutions, and also have a robust cross-asset class, cross-access point way to build these portfolios and bespoke solutions to suit those needs. There is no one size fits all for investors and clients today. I think looking back, there was a period of time within the sustainability ecosystem that there was a push for alignment and convergence on a similar way of thinking. But as we think through the many stakeholders globally with various needs, different investor groups, different risk return profiles, different cost of capital, and ultimate goals, ultimate beneficiaries, we're not seeing one specific need that we could point to and say, that's it, that's the one solution to fit a global investor base. That being said, there are two things that we do see today. We do see a drive towards sustainability thematic overweighting. So investors coming to us and saying, how do we pursue the energy transition more robustly in our portfolio? How do we access investments in healthcare and education to get those basic needs delivered to a higher standard so that we can then say we can pivot towards climate, given that the basic needs are being met. I think that piece is something that is resonating more and more. But for each individual investor group and client, the expression of that and what works for their portfolio may still be quite different.
You mentioned convergence is important in the sector. So Hamilton Lane helped co-founded Novada. What problems were you trying to solve, and how do you see Novada advancing standardization and convergence in sustainability data for private markets?
So what we saw was that there was a push for a lot of data, but as I mentioned, every investor wants slightly different data. That creates a complex challenge for general partners and for portfolio companies in the really data management segment. What do they need to track? How do they need to track it? And then how do they keep that data safe and permission and distribute that data out to various counterparties requesting different things? It becomes a complex problem to think about doing that manually. It's much more expensive as well for these portfolio companies. And everything that hits the bottom line should be considered if we can make it more streamlined and more safe from a data perspective. That, from our perspective, is quite responsible. So when we looked at the ecosystem, there really wasn't a data repository that was established as a public benefit corporation. And that component is really key. Keeping data safe, allowing and handling that complexity, and also permissioning all those data needs while building benchmarks. So from the perspective of what we wanted to do, we wanted to double click on that, which we have a long track record of doing, and support building something that works for the private markets. Ultimately, we have leveraged Nevada services internally. We continue to be involved with the team, and we continue to believe that real data and data solutions is critical to managing the future of how we think about sustainability. So going back to Kenny, your question on convergence, groups like Nevada and Nevada specifically make that challenge simple. Investors don't need to agree on all of the data points. They don't need to converge themselves to allow portfolio companies or general partners to converge all of their data asks into a single safe data set that's protected and can be permissioned in a variety of ways. And so it pushes that convergence actually down into the portco and the general partner and allows then a much wider array of investor requests to be handled very simply. We think data continues to be one of the critical components in terms of accelerating how we can think about sustainability as an ecosystem and within the private markets.
That's incredible work, Nina. So I also want to pick your brain a little bit on the global regulation. As we know, the global regulation in sustainability is kind of diverging right now. So how do you think about your strategy and disclosure from a such large global investor base?
Absolutely. So regulation and regulators are groups we comply with globally. We're a global business, and we understand the importance of the role of the regulator and what they're trying to achieve. In terms of how we handle the variety of different regulatory backdrops, there still is some degree of consistency, I would say, around transparency, disclosure, data-driven results, materiality, and ensuring that there is incredible clarity for investors. So not just transparency, but clarity. It's clear, it's earmarked, anyone can figure out what you mean. And so what that has done is very similarly to that investor GP portco data convergence ask, but it's about making sure that what we build and how we build it is suitable to deliver in multiple jurisdictions, multiple geographies, but that does not necessarily mean that it is a one size fits all. It very much isn't. There are different structures that you can pursue. There are different ways to disclose that you have to absolutely adapt to those local environments. And that is something that we will always do and is something that we continue to do. But when we think about that center and almost like the investment engine, very much what is in lens for many of the stakeholders in the regulatory backdrop is the clarity and the consistency and ensuring that governance and guardrails are really a part of that investment process and value chain.
And how is Hamilton Lane addressing climate across your portfolio today?
So we do have in our policy that we need to look at climate as part of our investment process. This is looking for material financial risks, and also it's flagging up data and information for those accounts or portfolios that are more tailored to either really reducing their climate risk exposure or looking for opportunities to really drive adaptation or resilience as they think about some of the overweighting to various investment themes. As we think about where our risks are concentrated, very typically in climate risk, we're thinking about physical risk and also thinking about transitional risk. Transitional risk applies everywhere, and physical risk, there are a few concentrated areas when we think about a multi-asset class platform. For example, our real assets platform, our infrastructure and real estate platforms with a lot of physical asset exposure. This is where physical risk is concentrated. It's not to say it's not included in other platforms, but it is something that you can look at on a more targeted basis as we look at asset heavy business or actually investment strategies to target assets themselves. And then when we think through how we monitor and manage portfolios, we have a number of different levers to pull. What we talk about internally is a multi-strategy, multi-channel monitoring process where not only is the sustainability team thinking through monitoring, but we have also our investment teams, our strategy teams, asset class teams, monitoring and managing their investments and engaging with other stakeholders, investment partners on a stewardship and also a monitoring basis. And so there really are a number of different angles in which we can gather information on understanding whether a risk profile has materially shifted or whether there's a value creation opportunity on the table to potentially raise within that stewardship context.
When it comes to your dedicated impact strategies, how do you define impact versus broader sustainability integration, and how are you measuring these outcomes?
The definition for us is very simple. When a business can financially succeed without driving impact, we would not consider that impact. So said another way, a business's financial success and impact success need to be aligned for us to consider it impact. That doesn't mean it will hit all of our different rigorous investment hurdles as we think through an impact strategy or an impact investment case, but that really is the minimum bar for us. So we're very product focused in the delivery, the core product of that business, driving impact. Now, from a tracking perspective, what we do is focus on impact measurement at the very outset. So our impact cases are required to set formal KPIs, so key performance indicators that are tied to the impact case and aligned to that business case. So again, that collinearity, that success and impact, success financially being fully aligned along that investment journey. And those are tracked for us on an annual basis, and of course, very transparently delivered out to investors as we come through reporting cycles. But those aren't the only metrics that we track within impact. There's a broad array of metrics tracked across our business, including for our impact platform investments that speak to the broader sustainability and alignment of some of those businesses that we've backed through that platform.
That's very clear. So looking ahead, what innovations are you most excited about for Hamilton Lane over the next few years? Obviously, you guys are very strong in technology. You're very strong on accountability and the product driven. So anything else you are excited that you can share?
Absolutely. It's the data and analytics side. So driven by our investments in technology and data, we're so excited to be able to have a number of years now of data having been tracked, recorded in a usable format. And so now that we're through really the better part of a full fund cycle, that data is becoming really meaningful and interesting from an analytics perspective, looking across our broader portfolios, as well as diving into individual takeaways and aligning that to how we can think about risk management, value creation, portfolio return, portfolio management. This is now coming together in the next few years, just given that there is so much more data that the industry has been providing. So we would encourage everybody to, if you're not already tracking data, to start tracking that data, to invest in technology and data and analytics in this area. It is something we are really excited about from an investment enablement perspective.
Thanks, Nina. I guess a metric for us is to track, what Hamilton Lane is up to in the field. So it becomes, our impact KPI to learn the whereabouts for the industry is heading to. So I want to ask you this question because I ask every guest this question. What do you think is the most effective way to turbo impact in your field?
Thinking about the fundamentals. So when we think about sustainability so broadly, sometimes that can be relatively ambiguous and can be overwhelming. But when we think about it from a fundamental investment perspective of what it can do, how it can be embedded and integrated into advanced thinking around risk and value and portfolio strategy, that's where it becomes really powerful as an enabler, as a tool. And so that fundamental thinking, which hopefully comes as a positive for most of your listeners, because I'm sure they are already focused on those fundamentals from an investment standpoint. That is absolutely something that we think is critical in navigating what elements of sustainability can really drive that impact in their portfolios and shift the investment landscape.
Thanks again, Nina, for joining us.
Thank you so much, Kenny. Glad to be here. Great to speak to you today.